Hi, and welcome back. It's Tristan Campanella, San Diego Real Estate, with this month's housing market update. I have a lot to share with you today, including housing prices, inventory, mortgage loan affordability, forbearances, and interest rates. I make these videos for you so you can make more informed decisions. And if you need a realtor anywhere in the country, contact me in the description below to get access to my network. Obviously, home prices continue to rise in leaps and bounds again. Some areas in San Diego have increased almost 24% year over year. On average, we're closing homes and selling homes at 105% of the asking price. Our closed sales increased 16% for a detached home and 15% for attached homes. Our pending sales decreased 3.5% for detached homes, but increased 7.5% for attached homes. Our median sales price in North County was up 37% to $960,000 and slightly lower for all of San Diego County. I think we're about $760,000 as a median overall. Our supply decreased again 61% from this time last year for detached homes and 66% for attached homes. The increases in sales prices comes with a slight decline in existing home sales nationwide as home buyers struggle with the declining affordability amid a lack of inventory. And it's forced some home buyers simply to wait it out in hopes of more inventory and less competition. Meanwhile, home builders are trying so hard to meet the increased market demand, with housing starts up 3.6% in May from April, according to the Commerce Department. As we all start to ease into new routines and we look forward towards a post-pandemic future, one thing remains certain: America desperately needs more homes. Check out my video on how to get your offer accepted to make sure that when you're ready, you get the home of your dreams. So while inventory on paper is still incredibly low, I am starting to see more homes coming to the market this month than I have in the whole last year. In fact, according to the National Association of Realtors, more new listings came into the market, with new listings in the past 4 weeks up 6.2% from 1 year ago. However, there's still a large demand and supply gap, with the total of active listings are down still 31% from 1 year ago. So let's talk mortgage. Mortgage purchase applications are down. So that's the first time in 52 weeks we have had a decline from 1% in all of the new mortgage applications. Mortgage originations have declined, and even the 30-year fixed mortgage rate hovers at a historic low level because because of the sharp rise in home prices, and it's just made homes less affordable, so less people can buy them. Our 30-year fixed mortgage rate is still wonderful, but our mortgage payment monthly is up $266 from a year ago. We are expecting to see the 30-year fixed mortgage rate move towards 3.5% by the end of 2021, and the inflation rate to average 2.7%. Even with the higher inflation, the Federal Open Market Committee has kept the federal funds rate at 0 to 25 basis points, as it sees the current inflation rate to be transitory, mainly arising from a temporary rebound in consumer spending. So, estimated monthly mortgage payment rose to $1,438 for all of nationwide, and it's more likely probably $2,500 here in San Diego. In April, National Association of Realtors Housing Affordability Index fell to 155.8. So what about loan forbearance? Is that going to save us? Are people going to have foreclosures? Well, as of June 27th, the fraction of loans and forbearance continued to trend downwards to 1.9 million, which is only 3.8% of total mortgages, according to the Mortgage Bankers Association. So we're not going to get a whole bunch of foreclosures. Rising consumer confidence and temperatures around the U.S. abound as we all get used to a new normal. And in fact, consumer confidence jumped to the highest it has been since the pandemic last June. After a year of a very competitive market, bidding wars and escalation clauses, there is good news for frustrated buyers. Realtor.com's June data showed that the inventory of newly listed homes is rising. More sellers are coming on the market, and they should start to moderate prices as we get more homes to sell. Mortgage rates dropped again, offering homebuyers some relief in a hot housing market. From a boots on the ground view, more homes are coming on market, However, they seem to be priced too high and for many home buyers, and I'm now beginning to see price reductions for the first time since April last year. This indicates that the market will slow down, and home buyers who are not willing to get into the kinds of bidding wars that are so frustrating so many this year may be able to get back into purchasing. Home sellers, did you miss the top of the market? Well, maybe, but only if you're overpricing your home. Simply look at the numbers. How much equity has your home gained in the last year? And if you want to have my help to figure this out, make sure to contact me. My information is below in the description. Add that percentage to the amount of your home, so the amount of equity, to the amount of your home from a year ago, and make sure to check what other homes are selling for in your neighborhood. Personally, I strongly recommend underpricing your home to create more demand so that more people will come and see it and make more offers. Eventually, this will drive it to the correct market value for your home. For our home buyers who have had the hardest time in this market, there is relief in sight. While we're not expecting a crash or any big thing like that, where you could get bargain deals on great homes, you will start to have more homes to choose from, which in turn will stabilize prices overall. My biggest advice to home buyers is don't give up. It is worth it. It is more important than ever to get a plan in place to help you be successful in the next year of owning a home. Guys, if you find this helpful, please share and like this video and consider subscribe. I'd love to know how I can help you make your dreams come true, because life starts at home.